Hey, Mike here. Today the Dow fell like 120 points. The Nasdaq I think was down like 17. But gold and gold stocks were actually up. And I want to talk about, let's interpret today's market action. I want to use this email question to help us do that. This was actually sent to me last night in response to a video I did saying that I didn't think that we're now in a bear market and that we're probably approaching the end of this correction that's been in the market now since September. And this fellow asked me about the VIX and Elliott wave theory. I answered this. Let me answer this one first, real quickly. He says, he's noticed I've spoken against Elliott wave theory, dismissing it when they call it tops in the market. And the thing is, I simply don't believe it's real. I don't think Elliott wave theory works. I just don't think it's more. We should probably say that for a discussion later. But I simply just flat out don't think it's a real thing, and it doesn't have any value at all. But let's talk about the VIX, which measures the volatility premium that people are paying in the options market. And when the VIX goes up, that's an indicator that there's fear in the market, and big spike because the VIX coincides with the market bottoms. So he says, I mentioned this is a panic sell-off, and I think we saw panic yesterday when the Dow was tailing over 300 points, and most 90% of the orders that were coming on the New York Stock Exchange were sell orders, meaning they were hitting the bid. And 90% of the stocks were down too, just about. So he says, well, the VIX is only 19, so how can I rationalize that this is panic? He says he thinks it's complacency, which will lead to more selling. I may end up being right, but your bullishness seems to be based on something else besides the price action. This is a real important thing to talk about because I think the VIX can show us exactly when the market bottoms, and let's bring it up real quickly. Usually when the market bottoms, there's a spike in the VIX that day, and then the VIX closes in the red. And we haven't seen that happen yet. Here's the VIX in the stock market. For instance, here's the VIX in June. It went all the way up to 27 and came back down. And I'm not looking for. I'll explain why in a second. But I'm not looking. I don't believe the VIX has to go high up to a certain level, like 27 or 30 or 40, for there to be a major bottom in the market. But I do want to see it spike up in one day and then come back down. And he's right. We haven't seen that happen yet. When I made the video last night, I was actually hoping that would happen today, that maybe the market would gap down on the open and cause the VIX to spike up and come back down. That didn't happen. And in fact, the VIX was in the red most of the day with the market barely up, which that was a troubling sign. And I think that was a warning sign that the Dow was going to fall, and it did. It closed down 120 points. But if the VIX had gone up to like 20 or 19 and spiked up on the open, I think that would have been a sign early in the open that, yay, we are getting a sign of a real bottom in the market. So, and if you look here, it went up to 27 to make the bottom last year, went all the way up to 50, and then went side. But that didn't coincide with the actual bottom. The bottom was actually around here somewhere. So the key, though, is I think we're going to see something like this. The actual relative level isn't that important to me, but I'm looking for a spike for signs of a bottom. Absent of a spike, what we need to see is some sort of reversal day in the market where the market's down, and then the Dow goes down 200 or 100 or whatever, and then is even at least by the close. We haven't seen it yet. That could happen without the spike in the VIX happening. If that were to happen, then probably what we'd see is the market bounce up and then come back down and make a double bottom, then break out. we had the potential for that sort of bottoming process to occur here, but instead the market, was trying to form support, then broke down, and now, we're going lower. So basically, we're now in a situation where I'm looking every single day for a potential bottom. Haven't seen it happen yet. And if it doesn't happen in a day with the VIX spiking, then we've got to look for a bounce up, then a double bottom. It's some positive sign. But I don't think we're in a bear market just because the VIX is at 27. I think, at all. And let me explain what I think is going on. Okay, this is the stock market. We're used to we're all conditioned. In 2008 we saw these huge swings in the market, and we saw the stock market crash. And afterwards we saw huge swings up, right? And then we're conditioned to be expecting this and be fearful of this crash, to happen. I don't think that's going on. In fact, if you look, each move higher that we've seen in the market has been less. Each breakout has caused smaller moves up than the last one. See, look, we broke out in September. The market barely went up, right? We broke out of a new high early in the year, and the market went up less than it did here during this breakout. So in this breakout here was less than this one. So each breakout that the market's made a new highs has created a rally that's been generated fewer percentage gains than the last one, and each correction has been less than the last one too. To me, that's a sign that the market volatility is shrinking, and that's what happens in a mature bull market, which I think is what we're in. I don't think we're in a bear market. I just think we're in a mature bull market where the gains and the volatility, the gains are less and less each time the market makes new highs. I'm talking about the U.S. market here. And the corrections are less and less. But what happens in these type of environments is that our minds haven't adjusted to that, and we're expecting these giant moves to happen. We're interpreting down days in the market to have these giant significance when I don't think they really do, in the sense that they're going to lead to some giant bear market or crash or anything like that. And I say this from experience because back in the last cyclical bull market, you can't see it in this chart, but it basically started down here, about right here actually, and it created this big giant move up for about 2 years. And then we entered this market environment where it was exactly what I'm describing to you. The market would go up and not really go anywhere, and each time it broke out, nothing really happened, and corrections caused panic and fear, but really didn't lead to nothing, and nothing was really happening or going on for 2 years here. And I think that's what we're actually going to enter. I think the market's going to bottom out in November, or if it hasn't already, and we'll have a nice end of the year rally, and we'll go through these highs next year. But probably once the market goes through these highs, it won't really go anywhere. May go up to 1,500 and that's it. But global markets will do well. Gold will do well. Commodities will do well because they're, in my view, in new bull markets, they're not 3 years into one. They're starting new ones. And that's what happened here. During the years here where the U.S. market basically did nothing, gold exploded. Gold stocks exploded. There are select markets around the world that did excellent. And I think what we have to do is not pay so much attention to the S&P 500, the Dow, and the NASDAQ and worry about them or try to make money in them, but to use corrections in them to buy into other markets and other opportunities. And that's what we've got to focus on. And when it comes to the VIX, interestingly enough, in these years, the VIX stayed in a very narrow range. It was extremely depressed and low. It didn't go above 30. This was a big panic in the stock market here, and it only got up to 25 or 24 or something. And And in the last correction we saw in the summer, the VIX got up to 26. The Dow fell like 10%, while global markets around the world were basically collapsing and fell 10% within a matter of days when they bottomed. But there's no panic in the VIX in the United States. So that's why I don't think we need to see the VIX go to 30 or 40 or even 25 necessarily on this correction. But it still would be nice to see the VIX go up one day 10% or something, and then reverse and end in the red to be able to mark a panic bottom. So this was an excellent question you sent me, and I hope my explanation clarifies what I think is going on in the stock market now, why I don't think we're in a big bear market, but then at the same time, I don't think we've got giant gains ahead of us for the U.S. stock market. And I think we're in a different market environment where the overall action is essentially dead when it comes to the U.S. stock market. You know, you're talking about a breakout, you know, a bottom here, a rally back up, which would be a nice move. You know, that would be like I think a 10% move or something, but then a breakout where it goes nowhere and people get disappointed. But what happens in the breakouts, though, is people will get extremely bullish and excited eventually, and you'll get another correction, but instead of leading to a giant collapse, it'll lead to the type of correction we're in now. And eventually, though, we will see, I believe, a breakout that will lead to a big move up for 6 months or a year that I think will lead to a final end of this bull market that I say began in 2009. But I don't think a move like that will happen for several years. So I just think we're in a dead time, and I'm not that bullish about the United States, and I'm more bullish about the stuff overseas, because you look at a chart like this, which is Ireland, and you see a market that isn't really in a bull market. It's in a long stage one base, but if it breaks it, and it's on the verge of doing it, and I think it will before the year's over. I own the IRL for disclaimer purposes, but you're looking at a new bull market, and in a valuation that's like a cyclical P of 4 or 5. So this is the thing where the U.S. stock market's basically, I think, in a dead zone, a trading range or whatever. This is something that can break out, and next thing you know, it's at 18 in a year or two from now. That's 100% gain. So this is this type of stuff I think money is to be made in. And right now, if I'm invested, but if I had no money at all, and I just say I had 10 grand and I wanted to put it into 3 ETFs, I would buy this, and I would buy gold stocks with the GDXJ ETF, and I would buy something like, I look at the European ETFs. My favorites are EWK, EWO, EWI, EWP. And if I didn't have, if I only wanted to buy 3 though, I would buy right now Ireland, IRL. I'd buy gold stocks, GDXJ, and maybe GWL, which is a global ETF if I wasn't able to diversify in a bunch of them, but I don't know why you can't really. In Greece, I'm very bullish on Greece. I bought that down here at 12, but Greece has gone up a lot. I think in the long run, this is something that's going to double again too, but I think Greece now is in a consolidation phase that may last for 3 months or 6 months or 8 months. So I think Greece is just going to trade now like between 14 and 19 and break out, in the second half of next year or something. So I think Greece now is probably going to lag, but I think it's great, a great investment. I bought down here at 12, so I'm just holding, and to me this is a long-term position because I don't think the global bull market is going to end for several years, 3, 4, 5, 6 years. And the U.S. stock market, as I said, for the next couple of years is, I think, in this type of dead zone where stuff like Ireland and Greece in the long run during those years would do great. So that's what I'm looking at, and we'll see what happens. And now we're in a phase where I've got to look at things day by day by day to see what's going on in the stock market. Nicely, though, even though the U.S. stock market dumped today, well, the S&P was down 36, well, 36 for the week, down 17 points. Gold stocks are up, you know, reasserting their relative strength that they've been displaying since August, and on the verge of breaking this trend line. So that's what's going on, and I'll talk to you later.